Oh, good morning, good morning. Don't know about those, how I feel about those ATH rejections. It looks like it's getting ready to break these highs though. Like it's kind of accumulating here still. We've retested multiple times. It's struggling, but at the same time, it's not giving up. It looks like it wants to re-break those highs. It's creating like a little bit of structure here. So I want to see and get like a 1 minute play. Some kind of a confirmation over here. That's what I will be looking for. I heard US central banks halted sales of physical silver. I'm not seeing that on the charts. Yeah, I think I'm not sure about silver. Sure what's going on there with silver. Let's see. Gold and silver price is expected to shine even brighter. Renewed geopolitical tensions, concerns about the independence of Federal Reserve and lack of fiscal discipline in the US will likely play major roles in sustaining investment inflows into gold. Silver's tight physical supply is fueling sharp price movements. Say it is. Silver's tight physical supply is fueling sharp price movements. While confirmation of a US import tariff exemption would ease this tightness and undersupplied market. See, gold eyes new record highs, and gold is at record highs right now. We're by 46.40, expecting a bullish continuation. Good morning, everybody. Morning, Jane. Nice to see you. People are probably overbuying silver out of FOMO. Yes, probably also supply issues. It seems. Silver making my day. Hey, what's going on with silver chat? Let's see. Oh, damn. Silver's up. Oh, 3.74? But 3.74. Is that a lot for silver? It looks like normal, kind of like normal. This candle here is like 7.87. So silver is up 3.80 something, but it can go a whole lot higher. Looks like we're heading towards maybe like $94 here on silver. You see, gold is only up like actually just 1%. Right under 1%. So I'm looking for a buy on gold. I'm gonna take a buy. I'll take a buy. Maybe if we break above this high right over here. Oh, what's going on here? Why is that small glitch on TradingView? Yeah, I'm gonna look for buy. I think if price on gold can continue coming up here. Oh man, look at this. 1 minute candle just melted 40 pips. Okay, doesn't look like we're gonna get a buy.
Why are you running?
Does not look like we're getting a buy here anytime soon. Why is this happening on gold? Like the London session, I was expecting price here today to be skyrocketing. Look at this, London open, now it's like going down. Maybe it's good. Maybe it's a good thing because it comes down, at least gives me like some kind of pullback for a buy. Hey, morning explorers, morning Joshua. Yes, in the chat. Sadiq, CPT. Looks like it's going to take that ATH liquidity. Yes, sir. Silver gave 2% profit. Nice one, Ray. Got the doctor in the chat. Morning. The Pip doctor. CPI prep probably. Hey, welcome Gbpjpy. Oh yeah, CPI. I don't know why people want to trade CPI. People want to trade CPI. Well, we got CPI yesterday. Now we have core PPI today. What happened with CPI? It looks like we got bad numbers which meant gold should have gone up at there like 8:30 a.m. But let's see, did gold move up at 8:30 a.m.? Yes, yeah, gold moved up here at 8:30. That's the candle. Yeah, like pretty big candle over here. TradingView is acting a bit weird. I don't know why that measuring tool is not. It's. Do I got? Oh, that's why I got the magnet on. Who put the magnet on? You got a magnet here. Strong magnet, weak magnet. All right, so price has pulled back. I'm not thinking this is a sell. I think this is a pullback for bullish continuation. But it had struggled. It did struggle quite a lot here by resistance. So that would actually give a very nice kind of like a sell opportunity over there. Like noticing some rejection wicks at resistance, but you need your entry confirmations. Question is, did you get entry confirmation? No, there's any entry confirmation. A small little breakout here for a sell-off. Start breaking these lows from this accumulation. This is the initial accumulation I thought we're gonna get the buy off of, right? By 46.38, but it seems like it picked the opposite direction. Broke the lows and then just decided to melt off. So you came back to even retest that zone one last time. Retest and then continue to melt off. So now I'm waiting to come back to retest this zone later. We're gonna possibly set something up here. That's what I'll be expecting, and then come back to retest that zone. But yeah, Monday was good. Monday was a good day. Tuesday was a chill day. Like Tuesday, we pretty much just waited for core CPI. So during the whole London session, we had no direction on Tuesday. And today seems like pretty good day too. Got a Wednesday here. We got markets are finally moving. It's a lot more interesting. It's a lot more interesting when price is moving. You know, like when it's ranging, there's nothing when it's ranging. But this is a kind of volume that I like. We might be coming to retest these Asia players down over here. So let's wait for that pullback. I don't like this. London session just opened and just it's completely melting right now. It's like you're gonna get the Asia. You see, because you have like the whole Asia right here from market open. Boom. Asia just skyrocketed up. They coming on to like London. London is a bit later on during the day. So now people are still looking for buys coming in later. They're going to get the sells instead. Because they're late. So yeah, let's wait for the pullback. Daily bottom wick hunting. Oh damn, Daniel. Still no bottom wick on this daily too? Yeah, that's interesting. No bottom wick. You see, this one had no bottom wick on a Monday. And we moved up on Monday. Very nice day on a Monday. But now Wednesday doesn't have bottom wick. And we're still trying to push up. So I think, you know, that's a pretty good sign over here. At least price is moving up. But what's the probability that we come and reflip? Because price will need to dump another 413 pip points. So I don't know. I want to get a buy. I want to take a buy. Did you see the news about Obama? I think we will see 5,000 on gold soon. What happened? Hey, Sarndran. Good morning, good morning. No, I did not see the news. See if we can create a support here. First trade a win, second loss, then the day is at BE. Yeah, if I take another trade now and it's a losing trade, I think I'll only be up like about 0.3%, something like that. I got feed all news. It was from July. Trump trying to put in jail. Probably still going. What? Trump's trying to put Obama in jail? No way. He gave Powell a subpoena. He's trying to put Powell in jail, which I find wild. Why not just let the guy retire? Like, you're literally about to put a new guy in. Like, what difference does it make? Yeah, we get it. You don't like him. He delayed the interest rate cuts. You know, big whoop. Maybe it costed him a lot of money. He probably costed Trump a lot of money. And now Trump is going back to get him. That's probably why he's still on Powell's case. But come on. Just let the man retire. He was just doing his job. I think maybe like a candlestick comes down like this. And then the next candlestick creates a support. And then the next candlestick breaks the highs. That would be a good idea for a buy over there. I believe Trump is actually trying to get Powell in trouble as his finishing. See every side of every story. Oh, I need to subscribe to this. Let's see, proceed to your story. Federal prosecutors open criminal investigations into Fed and Jerome Powell. Oh, let's see what's going on here. Gold. Yeah, the renovation project sustainably over budget and became a political flashpoint. And yeah, I feel like that guy was looking for literally anything to blame Powell on. It says Federal Reserve Chair Jerome Powell spent over $2.5 billion in renovations of the Federal Reserve headquarters. Now, yes, but now next one knows what happens if they don't follow what Trump says. It's mind games from Trump. Yes. Yep. He's conditioning everybody else now. So he's gonna pick some few victims. So yeah, I don't want to be on Trump's bad side right now. Greenland, King of Greenland, or is it King of Greenland? Said he said the F word to Trump. Said the F word to Trump, right? The King of Greenland. And Trump was like, your defense is only 2 sleds. 2 dog sleds. So this is gonna be quite interesting. Can't make an omelet? Yes, sir. It's going to be very interesting. It's a very interesting year that we have to make money. And coming into 2026, we already know this, correct, guys? We know this. We know that gold is moving crazy. There's no reason as to why it should stop moving. Like, when somebody tells you that gold is volatile and all of this stuff, I mean, that's kind of what you want. You want volume, not volatility, but this is what you want, man. You want to have an instrument which is moving. When you don't have an instrument which is moving, then you can't trade. It's not I think the thing is, like, you just have to trade less. Like, if you feel like something is a bit too volatile, it may be because you're overstaying your welcome. Because obviously the longer you're in the market, the more unpredictable it is. So we kind of just want to be in and out, you know? We don't want to hang around here for too long. This is not like, you know what trading is like? Trading is like you're on a foreign planet and this planet is slowly killing you. It's like you're climbing Mount Everest. You can't live at the top of Mount Everest because you will die, because your body is literally dying. At some point when you get to the death point where your altitude's too high, you're literally dying by the second. But you can only be there and you can enjoy the highs for a bit. You know, you can spend a bit of time up there, but then you got to go back down. You know, that's not a place that's good for like a human being to live in. So the market is kind of the same thing. You know, we just got to enjoy our time here for a little bit, but then we got to go back down. I don't know why people get the idea that they can set up camp here all day. You know, the longer you do that, the more losses you're going to take. So I'm thinking, should I take a break of these highs or wait for a break above 46.29? Break of those highs will be, let me see. Oh, this is happening quite interestingly here. It'll be the candlestick flipping. The 5-minute will be flipping. So I reckon I'm going to take a buy as we break above this high right over here. Five-minute will be flipping. We got about 1 minute till the new 5-minute candlestick opens. Do we wait for the bigger one? If we wait for the bigger one, this would push about 20 pips. Alright, we're about to get the 5-minute candle close. It's gonna be like a swing entry model. This is the area I took my buy this morning. We're in the same zone. We've come back to retest those buyers again. We already did it a few times though. Take this buy here. Price starts to break above the highs. Here like a support. We're coming into 8 SMA, catching up on the 5. It'll look like a rejection. If candle starts to break below this support, you got a few like wicks over here that will be forming like a wick, and then the candle will look like this, and then this whole area will look like a rejection for price to continue to move bullish. So I think that's what I'm gonna wait for. But let's a liquidity grab. Look at that, liquidity grab just came in. We just got the liquidity grab there. It's a little volatile. Holy. Wait a second. That's very volatile. Alright, let me remove this analysis here for a second. Boom, boom. Should we wait for the break of that high? Ooh. So volatile. Not sure where that volatility came from right there. There's a small liquidity grab. I think the move down is still happening. It would be nice. It would be perfect if this could come up, create like a pullback, and then break the high again. Yeah, I think that would be the best thing to do. Otherwise, to wait for at least this high over here. Because if it's going to be volatile that close to that entry, then... But it's a break. You know, the thing is, it's a swing entry model on the 5 minute. That's the thing about it. It's a swing entry. So we're going to take it like a swing entry. All right, I just got stuck in. See if I can follow through. About 1 minute 20 seconds for the 5 minute closure. All right, nice push. Oh, we still gotta wait for the 5 minute closure though. About like 50 seconds, but we got the 5 minute liquidity grab. So I wouldn't expect this thing to come back down into this region over here. Because we already got the liquidity grab on the 5 minute below those lows. Just gotta survive any like 5 minute pullbacks.
Spartans! What is your profession?
50 minute looks good now. Here's the new 5 minute open. Oh, damn. It pushed through my level. It pushed through my level, so I closed when it pulled back up. That was too volatile. You see, it's a little bit volatile in this section here. So that's the thing I was a bit cautious about. But man, that's not good. That's not good. At least I managed the trade properly there. The thing is, you know, it's had its liquidity grab, so it should not have come back down here. It should not have retested this area. We'll see. I'm going to give it a second chance here if it re-breaks the highs. Because I believe that gold is bullish today. It is still super bullish. Yeah, let's see if I can get a re-break of the highs. I don't know why it's coming back. This does not make sense. Look at the way it's coming back to retest this zone. Like a couple of wicks, especially if it starts to reflip right now and then re-break its that consolidation high. Oh, we got that 5-minute SMA catch up. Could have been that 5-minute SMA. Let's see what it does here. Situation in Iran keeps getting worse. I mean, that's good for gold. Yeah, I'm very closely watching this. I don't know if this is going to be a genuine continuation for the sells. It doesn't seem like it. Is it going to pull up? Oh. Doesn't seem, something about this does not seem genuine. Something's definitely happening here. Honestly, if it pushes down, then, you know, that's it. But if it pulls out, I think it's just grabbing orders. Look at the way it's behaving right down here. It's taking out like these lows multiple times. I feel like it's shaking out as many traders as possible before a big move. Typically, the market sometimes does this. Yeah, so I don't mind giving my trade here a second chance. From the structure. But it needs to move in this certain way. Preferably if it just starts moving up without creating any additional entry confirmations, that it can just start pulling up. We're about to get the 5-minute. We're about to get the 5-minute close. So something like this, you know. Pull up, 5-minute candlestick closes, re-breaks the highs, and then continues to move up bullish. Yeah, let's see. Slurping up blood like a vampire? Yes. Yeah, choppy like consolidation here. You can see how the 5-minute candles are barcoding. Let's see, let's see. Well, the initial break was really nice. It pushed up, what was it, like 10 pips. Let's see, is there another entry? Maybe there's another entry. Wait, not yet. There could be a sooner entry somewhere here. See, that's a break of that high. for the break here at 95. 46, 26, 8. All right, excuse me. All right. This could be heading to retest of 4-hour FVG, sell or buy. I don't really understand. I'm on a sell. Oh, you're on a sell? I think it's if we can break above some highs here, we should see price move up. Even considering getting in a bit earlier. Today is a good day for buys. This is a very bullish momentum here on gold. Got a new 5-minute that's about to open right now. I think I would wait for the 5-minute this candle here to first close. Oh, but it's pushing already. Might have to execute. But we're gonna get the new 5-minute freaking open right now. That's a problem, so I gotta wait. Oh man, it's already breaking. Oh, great. It's making it very difficult to catch because now we still gotta watch out for the 5-minute open. I prefer that 5-minute can first create a bottom wick. Come on, Goldie. Seriously, like a few seconds? Alright, let's create a bottom wick. When this 5-minute here reflips, it should be good to go with that clean range on the left-hand side too. But this one needs to break. This 1 minute here. Alright, I got triggered in. I'm trying to catch his buys. Now to just wait. That's all that we gotta do now, is just wait. So we got 1 minute SMA in our favor. We still got some room there before we tap into that 50 SMA on the 5. It would be nice if that candlestick had a top wick to break, but this is a volume-based entry, so don't really require... No freaking way, Goldie. There's no way you're not ready to move up yet. You've just had so many chances to fake people out down there. There is no way that you are coming back down now. You have literally done all the liquidity grabs, Gold. What is left? Better go up. Technically speaking, it did not even make sense for you to go down the first time. But I get it. You are greedy and you wanted to stop loss people. I understand that. But there is no way there's anything left for you down there. Move up. Daily bias is bullish. We're literally by 1% on the daily. Where are you going? There's nowhere for you to go but up. Stop playing with me, Goldie. Today, gold has wiped profits. And you know, the thing is, it had a pullback already. I get the people who are trying to buy the ATH, but it's had a pullback. This is a significant pullback. And we're trading within the range. If you look at the 5 minutes barcoding, and it's attempting to break out of the 5 minute. See if those SMAs can hold it. This is the last support. It should move up at this support. This is the last support because this is where we manage our risk. Based off our data, this is the last support usually if this candlestick here closes bullish. Wait, let me... Yeah, it should not close below. This is when price should start moving up. Right over here. We're about to get the candlestick close in about 16 seconds too. There you go, Goldie. Come on now. Stop playing with me. All right, so manage risk a little bit on this position here too, chat. Just reduce it from about 20 pips to 17.5. Come back to retest those entries. New 5-minute candle open. Yeah, as it breaks above these highs, I think if candlestick breaks below its lows, I'm going to put my stop loss here to break even. Yeah, I'm going to put my stop loss here to break even. Because it should start moving up. It shouldn't be coming back down to those lows. But it's the way it's behaving right now, it's super volatile, so... Come on, fly, Goldie. I don't know why it's struggling, chat. Like, it's struggling way too much. This is way too much of a struggle. You got two 5-minute candlesticks close without a... well, on my broker, it looks like two 5-minute candles close without a top wick. Finally, Jesus. Can we move, Goldie? I don't know what's wrong with this London session stream here. Like we're losing. There's no confidence, man. Come on, Goldie, let's go. There we go. All right, chat. I'm securing right here. Take profit hit. Congratulations if you caught the second move. Make sure it doesn't come back to that wick right there. Yeah, I'm gonna have to try again later. I don't know what's wrong with this London session, man. It's too freaking volatile. But, you know, price can keep moving up here. But I don't like this type of trades. I don't like this type of trades that give me a hard time. So it's better let me secure something now and try again later because of the way it's moving right now. So, yeah, I think it's pretty good. This should have been easy, chap. This should have been a very straightforward trade because it's moving up. This thing is moving up. It wants to move up. It already had its retracement down over here. It already pulled down. It did a fake out here multiple times. And we're supposed to keep moving up. And we got clean range up towards 46.36. But you see how we knew this? Like once a candle here closes bullish, that price will just keep going up. Because usually when you look at price, you have to see when is the best time to manage your risk, you know, so you don't like manage your risk too early, right? You don't want to manage your risk too early, so you got to let the candlesticks print just a little bit more. It almost gave a scale-in opportunity here too. If this next candle here was to close bearish, then it would give it like a scale-in opportunity at the break of the highs. That was a roller coaster of hatred and waiting for BE mark. Nah, yeah, that was... If you can tell, like, if you've been trading for a while, you can tell based off of... You know, when you see the candles in hindsight, like this... It looks okay. It looks calm, like it's just moving up, correct? But you can tell by the fluctuation. You see how it like fluctuates quite a lot though in the 1 minute? That this is not like, it's not an easy trade to hold on to. Like sure, it could keep running, but it's not like a stress-free trade to like hold on to. You know, because you got these other trades which just keep skyrocketing up and it doesn't have that sort of like tick volatility. But you see, it's still pretty good. It's still moving up here. Awesome. Because it had its pullback, chat. Like, literally, it had everything right here. So it didn't even make sense. I think what it was trying to do was... I think what it's trying to do, it's trying to shake people. Like, a bunch of people out right there. What's silver doing? Alright, silver's still moving up. Yeah, see, we're coming up to retest the high here. By 46.36 now. 46.36 resistance. Fly, Goldie. Yeah, we'll try again later. I'll try again during pre-New York. No big deal. Got in late, should be lower 15 pips in profit now. It's still bullish and order flow still going up. Awesome. No.
Why are you running? Why are you running?
You know how many people got caught in that volatility today? We out here catching profits, boy. Oh yes. Yeah, double chat, everybody. If you're still holding this trade, man, I feel like I should have just held the trade. Should have been greedy. Should have been greedy and just held the trade. Let's see. I just got a full at last 1 minute high. Something is alright. Let's see. London does not pay out well. Oh, we all celebrated Josh's birthday last Sunday. Hey, happy birthday, Woods. I think we wish you a happy birthday, right? Hey, if we didn't, happy birthday, brother. Hope we all had amazing shark fin soup there in China. I've always wanted to try shark fin soup. I made a decision to wait for NY as it's not moving how I'm used to. Let's see. I'm gonna stay chill with you guys though. Oh, okay, nice. Yeah, you see, now we've hit the resistance. Now that range has been filled. You see, because price was basically just retracing and then accumulating here, so it can move up to fill this range towards resistance by 46.36. That's what he was trying to do. Hey Natalie, thank you for the sub. Looks like break even for me, still in the sell. Oh, you're in a sell. The sell definitely would be so much nicer up here where all the confluence was. Like the rejection by the ATH. Some people are trying to buy the ATH. I was also trying to buy the ATH, but I didn't get triggered in. So we got the pullback and then continuation. My name is ICT. I command you to go up. Yeah, it's a pretty good day. Pretty good day here today. Pretty good day here. How do we even journal this trade? Should we journal like a break even or what? Or just put it like this? Alright, let's do this. Let's do this. Do this. Those 3:20, 3:35 a.m. One, two, three. Dun. All right, awesome. I can move on to the next trade. Yeah, now we're gonna see if price can keep going up. If you have not secured something, make sure you secure something. This is really important here, that you're gonna secure something, because we don't know if price is going to move beyond a 46.36. We don't know that. We don't know that. Even if you come on here onto our WAP database, make sure you go through these label charts. You know, if you're gonna be new to the mentorship, make sure you come over here. Let me try and zoom in a bit more. We're gonna like full screen. Yeah, make sure you come in here. You read these labeled charts because this is going to be the fastest way to kind of get an idea of the visuals of what it is that we're looking for. And the way we manage our risk today, you're going to find that on the add-on section right over here. So you see, this is it. This is where all the education is. Because everything that we just did right now, you will see that in the simulations that we did over here. This is the whole idea behind these things. See, consolidations and momentum. Insurance on your entries. All right, let's see. What is this one about? Insurance on your entries. Yeah, you gotta watch these because you know sometimes there's a lot that happens that you can't like share it all on just like one live stream like this, because we need certain things to happen that we can explain those things. So when the market gives us those opportunities, we're like, okay, so this is the situation where you can do this. You know, so make sure you watch these videos over here. Let's see what else we have. Trade breakdown, ranges. Some of these are on YouTube, but majority of them are not on YouTube. Rule bending, when to bend your rules. Backtesting in the shotgun. Weekly backtest, swing entry model. Clean ranges and confluence. Literally what we just did right now. Let's see, speed run of the week. Yeah, we need to do a simulation. We need to do a simulation. Something keeps coming up on the weekend, but we need to do another simulation over here. See, the simulations are like 1 hour, 1 hour long, 1 hour. Very much like just an hour long, 1 hour, 30 minutes. But yeah, I think with the simulations, that's when we get through all these entry models. I think this is where you actually find majority of everything through the simulations. But if you want like a more step-by-step, you have the 4-day bootcamp. Just go through the 4-day bootcamp. Understand how to execute on consolidation breakouts, shotgun plays. You know, what kind of confluences we look at. So yeah, if you're new, man, you got to study that, man, because this is everything that we're talking about in those videos. You know, and it's gonna happen over and over again. Let me see my trade this morning. Yeah, I think my trade this morning was the same exact thing. Look at this. Look at the same exact thing this morning. You know, same but different. Same but different. But the idea here is this is a range that price could have filled with the entry confirmation that we got. I think a much cleaner entry would have been like a swing entry model here at the break of these highs though, because that actually kind of flowed a little bit better towards resistance. But that and this, same idea over here. You see, it's like a magnet. These zones are like magnets. That's how you're going to see price like be attracted to them like this and then start to have those reactions. Right? I think it's super important. Because we don't know if we're going to get through this zone. No idea. You know, we have all-time highs by a 46.39 over there. So are we going to hit the all-time highs? I think the best thing you're going to do is, like what we speak about in the simulations, is secure something like 80% and then just let the rest run. If you think that price can still keep moving up here on the day. So that way you're not going to feel FOMO. And if price continues to move up, you're not going to feel FOMO. And you will still be a part of the trade. But for me, I don't feel FOMO that price moved up like this because it's literally around the corner, chat. Like the market is abundant of moves. This next setup is just around the corner. It's going to happen again. So don't feel FOMO. FOMO does not exist. You create FOMO in your own head. A lot of people, they're going to create all this FOMO like, oh man, I missed this move, or oh, I could have done this differently. Don't worry. You have so many more opportunities to do what you wanted to do. And as soon as that clicks, you're going to start to see the chart in a different light. Like, as soon as you understand that the market is abundant of opportunities, you see the market in a different light. It's just a matter of like mindset. You know, when it comes to money, a lot of things surrounding money, it's all just a matter of mindset. But unfortunately, some people are not going to get that yet. It's going to take some time. Where can I get the videos? It's going to be on WAP. Do you have a link to this page? Yeah, we got a link here. See, leg day yesterday, so glad I can just sit in a chair all day. If I do leg day, my legs are gonna fall off. I haven't done leg day in ages. Your live videos are great, man. Thanks for doing these. Smash the like button. Thank you, thank you. So you're like 25? Nice. Yeah, sometimes you gotta give your trade a second chance. So my perspective on giving trades a second chance is usually to mitigate risk. But sometimes people give trades second chances to maximize profits. So that's what we do. I think it helps a lot with psychology. You know what other people do? Other people, let's say if they're going to take a loss on one account, they like to trade on a different account. So that helps them with their psychology too. So they're going to feel like it's a fresh start. Remember people, there's a huge difference between giving your trade second chance and revenge trading. Yes. Yeah, you know, that's why you only give yourself like a second chance if the conditions are right, you know. Today's one of those days where it's like gold is moving. You can see the swings. You have a lot of nice swings over here. And there's volume in the market, correct? There's volume, there's specific conditions which warrant giving a trade a second chance. Sometimes we're going to give second chances and then we don't know the difference between that and a revenge trade. And it happens to me as well sometimes. It happened to me already once this month. So instead of giving myself a second chance, what that actually was a revenge trade. You know, because price was moving up and it was more of a revenge, but this was more of a calculated second chance. Man, there's a big difference, but you have to know the difference, right? You have to know the difference. That's the silver lining between trading and kind of like revenge trading. Following rules and revenge trading. Because the market's not perfect. Sometimes it acts in a certain way that it just warrants a second chance. Look at this. We're rejecting this area here. Again. Come back to the highs. Look at this wicks. Still struggling. What is the size of your SMA, please? This is a 50 and 8 SMA. Oh, you can download the SMAs though. You can download the SMAs. Just come onto the Discord here and go over to SMA indicator. And then you can click on the link here. Or you can click in the description box too. See Alia with the big trades. You know what you gotta do, Alia? You gotta send a before and after picture. Oh, but I think this is it. Okay, nice. Yeah, price is coming down. 46.06. That's on gold. Not exactly. I thought it would play out, retrace much deeper. That's on the 1 minute. Secured 19 pips. Got a nice little fake out. This is actually a very clean move. Very clean move. I think personally, I would have gotten in at the break of this candlestick once it closed like a support. But yeah, I see it too. Inverted head and shoulders. You got a little fake out below there. 20 pip sell. Nice. Price to continue moving up bullish. The accumulation break. Daily bias here is also bullish. Very clean. Awesome. What's up, Vic? Done with exams, resuming back tomorrow. Hey, Kevja. Welcome, welcome. Let's go. What is exams already in January? What exams are these? It's the beginning of the year here. Don't miss this gem. Hey, Woods. Let's go. We got that samurai attire next to the, what's it, sakura? The sakura tree. Yo, this is sick, man. Where did you post this? On Discord? Birthday meal. Nice, bro. Looks like y'all had a good time. Where's that shark fin soup, though? I don't see no shark fin. All I see is sushi. Give me that shark fin. It will make you win more trades. Yo, where'd you get the outfit, though? Do they actually give you this at the restaurant? Like, you can choose to wear this. Or you have to wear it. W pick. Yeah, but look at this. Prices at resistance, profit taking. That's it. Now it's setting up again. It's getting ready for another breakout soon. See, it's already cooking up something here on gold. If it creates like a support and then re-breaks these highs like this, then you're gonna see the volume start to come back in again. That's my little bro and wife. Yeah, you pay extra $30 and you get to borrow the clothes. Awesome. See this? It's setting up again. Look at that. Sorry, break the highs over here. It actually closed. You see the volatile? It's actually kind of volatile. I'm not gonna cap. Gold is a little bit volatile here today, but it's not like a bad. Okay, it's not so bad. But it is definitely volatile. You know the thing with volatility, you just have to be cautious about trades in drawdown, right? Because you can have those spikes, and that's what you want to mitigate on quickly. It's starting to distribute right here. It also got a small little liquidity grab situation right here. Let's see how stress-free this entry would be. It's about like 16 seconds. Because it's trying to break above these highs. You see, it tested these highs. And that's a profit-taking zone. Correct? That's why we always see these reactions. When price fills up the ranges, you see these reactions. See, this is the entry model right here. This is what I'm saying. Like, this is how price, it needs to move like this. It's not supposed to give you volatility. It's supposed to move clean. So pretty smooth on the break right over there. See, how much is this going to be? Almost like 16 pips. Needs to push up a bit more. But it's right at that resistance point. It's trying to break that resistance point. But you see where the volume is coming in? Because this is a high volume area. Chat, that's a high volume area. So it's trying to, it might come back to retest a bit to grab some more orders and then flip back bullish. We're going to wait and see what happens here. That's what I did on my trade this morning as well. It came back for a bit and then went up again. Do we have a sell now or not? What do you think? Oh, I don't think we're going to have a sell here. Price is moving up. If anything, you want to be looking for buys. Fly, Goldie, fly. Pin- Fly, Goldie, fly. You see this? You see how stress-free this one was? That'd already be stop loss to break even. You see this? This is what we're looking for. I don't know what happened over here. I don't know what all this was about. I don't know what all of this was about over here. See? Liquidity grab, break of the highs, another liquidity grab, break of the highs, another drawdown. I don't know what all that was about, to be honest, Chad. Like, this thing should have just moved up because it knew it wanted to move up. That's the thing about gold. And a lot of people don't understand this with gold because they haven't traded gold enough to understand the relationship between gold and you know, like, I guess it also depends on how you trade and what your strategy is. But when you're going to trade an instrument, it's like you're going to be in a relationship with an instrument. So you know how she acts and how she's supposed to act when certain things happen. And when she's not acting like that, you know that there's something weird going on, correct? But this is perfect. This is exactly like what we want to see over here. It's like we said, like sometimes it comes to retest. That happens quite a bit, but then it's supposed to just keep moving up. It's not meant to give you a hard time. So it's trying to break above these highs. You see that little accumulation here? This is a high volume area that it's breaking beyond from. I think the reason is this is a very high probability zone. So a lot of people could see this and they could sense this. That gold is creating all-time highs. So by the time it pulled down like this is really obvious. So I think that's the reason why. Sometimes when it's really obvious, it's also not as a clean move because more people can see it, correct? That's why you're going to find that your A+ setups, the ones you keep looking for those A++ setups, maybe they're not playing out the way you expect them to play out. But the ones which are like more risky, those are the ones which end up playing out, correct? So it's about finding a balance between like executing on those risky ones and not being too overly cautious about the market. Like sometimes you're overly cautious, it actually makes you lose trades and you lose confidence when you're overly cautious. You see, it's attempting to break, but look at this massive volatility coming in again. But you can see it's attempting to break, and that's a reason why. And we speak about this all the time. When price is literally below a resistance or support and you see it accumulating, it's getting ready to break that zone. And that's the whole reason why this is happening. Because it's trying to get through this level because this is a lot of heavy lifting over here. So imagine the amount of heavy lifting that gold has to do to get beyond this point. You know, we're flirting with the all-time highs here by 46.39 now. Gold is a she. If you're a female trader, then yeah, I guess gold is a he. All right, let's see if gold can actually make the all-time highs though. It needs to push up a bit more, like 32 pips. Gold is a drama queen. Dude. Yeah, that was nasty right here. I mean, even on the replay, looks brutal. Look at that. Break of the highs. The funny thing, it did liquidity grab here once, and then it rebroke the highs, and then came back down like this, taking out the lows. And then that's when it moves, correct? That's when it moves. Because like the probability that people survive this is a lot lower because there were entry confirmations. You see, like it will take out the lows. First of all, it would whip the sellers down there, take out the highs, and then whip the buyers, and then take out the sells, and then whip the sellers, and then go back up like this. The probability people are going to survive that speed bump is really, really low. Really, really low. So you always got to give it a second chance. That's the only way. Because at that point, it just moves because it knows it's shaked everybody out. Now, if it wants to keep moving up, then it's also retesting this zone again. You see, this is a high confluence area, chat. See, I told you even on the first retest, like sometimes it just comes down to retest, you know? So look at this. It pushed up and look at what it's doing right now. Before it even breaks these highs, it came down to retest that same entry right over here that we spoke about. You see this market psychology? It's not an accident, chat. Like, people think trading is an accident. You guys think like people just get lucky. It's not an accident. It's not an accident. Like, the thing is, you have to have a system where you fully understand that system, right? And then you're going to be able, through that system, to understand the market a lot better, to understand that the market is actually efficient. You see, now it's breaking the highs. Why would it have to come back down to that zone, chat? 46.35. Why? Why do you think? Like, it's not random. It's super efficient. You know, like, that's why for me, I look at the market like it moves how it wants to move. It's not based always off mathematics. Like, if you speak to somebody about like an economics degree and people are trying to figure out the market, they'll find a way to make it seem like very mathematical. But in essence, you have two types of people. You have the people who believe in random market hypothesis and those who believe in efficient market hypothesis. So the people who think that the market is random, and it's now when you start talking about liquidity, you know, because at any given point in time, buyers and sellers might be coming in. So it's like more random because for price to move somewhere, a buyer and a seller needs to be involved somewhere, right? But I believe the market is more efficient, as in it does not need those certain things to happen for it to do certain things. Correct? So that's why I've seen this happen so many times. If it was random, there's no way that this could be that efficient, that we could have a sample size of that happening over and over and over again. It loves these little retests. It's also sometimes people are gonna put their maybe like extended TPs for XY reasons. Maybe they're looking for all-time highs. So by the time price pushes like 30 pips, they'll put their stop losses to break even. And when you put your stop loss to like a hard break even, given the price differences, sometimes you get put out of your trade. So it's like a very nuanced thing. I think when it comes to trading, it's like very detail oriented, you know. So if you're gonna be a detail oriented individual, then I think scalping is perfect for you. Correct? Like, because that's where you gotta really dig into the nitty gritty. Now look at the way this 5 minute here closed. Yeah, how did it close? Yeah, I just pulled up towards the end. It was like a sort of low volume doji candlestick. So low volume doji candlestick, especially for buys, would typically have like a small candlestick body and a long wick, such as that. Typically, what would follow such a structure like this is the next candlestick would come to refill that wick, such as this. Let's see, low volume here at the all-time highs. Goldie's trying to break the all-time highs. What do we do now? Well, what do you mean? What are you gonna do now? What are you gonna do now? I don't know. What are you gonna do? You know, you have 23. You got like, okay, so you got 22 hours in a day, and 2 of those hours you're gonna spend on the chart, right? You're gonna spend on the chart. You're gonna see, okay, can I get a trade, maybe 1 or 2 trades a day, for a minimum of 2 hours a day? So I don't know what you're gonna do for the rest of the 22 hours. You gotta maybe gonna find a hobby, or, you know, journal your trades, study the market. But when it comes to actual trading, you're gonna only have like 2 hours a day. The rest of the time, you're gonna do something else. So, yeah, I think I'm still in my 2 hours a day. My first trade, I was on the chart for 4 minutes from trading time. My second trade, I was on the chart for 35 minutes. So, you know, I still have time. So I'm going to look for one more trade during pre-New York. But yeah, you got to find something else to do. You know, if you got to set yourself a limit, if you've already taken one trade and you said one trade a day, then that's it. It's two trades a day, that's it. It's trying to accumulate again. It's trying to break. You see, it needs more orders. So if it gives another setup like this and it breaks that setup to the highs, at that point, I think it will actually make the all-time highs. We will see all-time highs by 46.39 there. It will just have to look like this. Candle will close bearish right now. This candle will be nice if it closed bearish, strong bearish. The next candlestick to open up like this, create a support, and then re-break the highs. We'd like to say if that candle actually closed a little bit more bearish though. Kind of like what happened here. This is the same thing that it's trying to do right now. So you see that same move that the market did here was to get through this level. And you see the same move that it's doing here. This is to get to the ATH. So when you look at trading and structure, it's like a game, correct? They build structure and then push. Once they push, they have covered new ground. To cover new ground, comes back and then set up again, create a foundation, and then the push again. It's like when you go to war. You know when you see the Spartans go to war and they have their shields up? So they gotta push. They gotta push the other side and they keep pushing the other side. You got the sellers and the buyers and they keep pushing each other like this. Right? But then every now and then you have to reorganize. You gotta give a bit way. Get your guys at the back, create more structure, and then push in again. Correct? Like since the beginning of time, we have been doing the same thing that we're looking at here in the markets. It's just taking a different shape, but it's the same idea. Before the buys, how would you figure gold was bullish? We were moving all-time highs. Like you see price on the daily here, it opened without even a bottom wick. And we are creating all-time highs. It's the same thing that happened on Monday. Monday, price opened without a bottom wick, create all-time highs. And it's just like pushing. But if you still don't know, you got to download the free TFX indicator. You see that daily bias that says bullish up here. It will basically tell you, if you don't want to learn how to read the structure, it will tell you that market is moving up. It will switch to bullish. If we got another pair, you'll see that okay, silver is obviously bullish. Let's see, you see like GJ says it's waiting. So if you're going to trade GJ today, wait for that to flip bullish or bearish, and then you're going to have a much better probability of that direction in whatever trade setup that you want. And you can use that as a confluence. You know, if you're using Fibonacci or ICT or whatever, man, you can use that as a confluence. At least you're going to know you're in the highest probability direction. So you're going to have a very nice TFX confluence. I don't know what confluences people use when it comes to fair value gaps, but I think this is going to help a lot. Because you're going to find people always take, with ICT, they're always taking, there's someone in a sell and there's always someone in a buy. So it's like, who's correct? You know, so this is going to help you get the edge over your enemy. Because I know a lot of you are still on that fair value gap nonsense, right? But this is going to help give you an edge over your enemy. So when you're focusing on a fair value gap and a daily bias, you will have a better probability of winning that fight. GJ is so nostalgic. I got GJ flipping here. Let's trying to push up the all-time highs. Look at those pullbacks here. Pretty strong wick. It's trying to break the all-time highs. So sometimes it's gonna fetch some liquidity as well. Like this. It's basically what happened that day I overtraded, chat. Remember that day I was overtrading and price was fetching liquidity? It kept pushing down and then pulling up, pushing down, pulling up. That's kind of what it's doing here as well. It's pushing down. It's trying to get the orders so it can break the highs. It's a very difficult area to break. It's going to take a lot of force to break this zone. 5 SMA, kiss of death. Yes. Got 5 SMA, kiss of death there. Bank of England's Taylor, expect monetary policy to normalize at neutral sooner rather than later. This is such a nice headline. Gold and silver prices expected to shine even brighter. Gold eyes new record high. Geopolitical risks also remain elevated with markets closely monitoring potential US involvement in Iran's political unrest following repeated warnings of possible military action. Meanwhile, Haven demand strengthened amid renewed concerns of the Fed's independence after US prosecutors launched a criminal probe linked to Chair Powell's June testimony. In response, rate futures showed investors split between expectations of 2 or 3 Federal Reserve rate cuts this year, exceeding policymakers' median projection of just 1. Yeah, we're still expecting, I think, for the next FOMC is definitely just gonna be a no change. Got in about 14 days. That's gonna be a no change at 97.2%. But the good thing is there's a lot of other things happening that's causing Trump to help boost gold bullish. So that's really good. Because, you know, like when there's no macro fundamentals, when there's no drama, then the ratings are low. You know, like trading is like a TV show. So when there's no drama in the real world, then the ratings are low. You know, people don't tune in. So then like volume starts to die out. That's why we're always going to have wars. That's why we're always going to have drama. Because that drama actually stimulates the markets. And I think like the more people are going to understand about what the markets are and how our society is actually constructed is going to be quite interesting for you, I think, at that point. You're going to really understand a lot about like how banking systems are just big pyramid schemes, and the whole thing that we have is quite artificial. The whole system that we have developed is quite artificial. But you know, it's only a system that we have. You should see world debt clock. Look at our world debt clock over here. Like just owe money to who? This thing is taking so long to load. Come on, load. World debt clocks. Interests are cured. Chat, this website doesn't work anymore. Who owes who? Yeah, who owes who? Like, really? It's like that picture of Nvidia and how the big tech companies just lending money to each other. That's like what our economy is. Like, it's just money in circulation, but the debt keeps increasing. Like, it's always like that until something bad happens, and then we have to get bailouts, and we've already seen that happen throughout history. So it's an artificial economy. It'll always be in debt. We will never be debt free, and the debt is always increasing by the second. Literally by the second. So only until things get really bad, or until we get like a new technology come in, or we just need to get bailed out again. That's our economy. And the way it works is we need drama. We need a lot of drama. The more drama we have, the better for the economy. So money can keep flowing. Because we don't want this river to stop. Anyway, that website's not opening up. I don't know why it's not opening up there. This is a massive accumulation as well, trying to break the all-time highs. It's from, you got the resistance points up here, and you got support areas down over here. You see this? Huge accumulation. It's waiting to just have a bomber cloud. I think it might have it anytime soon.
Bomber cloud.
And once it breaks, you can go in the daily time frame, and you can see here on the daily that we've already moved up about 533 pips. But as a daily target, we're still in striking distance of $4,700 over there, like per troy ounce, 4,700. So we're gonna need to move up about 650 more pips to 4,700. So that's what's happening here. You're gonna find a lot of buyers are gonna be trying to come in here by 46.39, trying to get in on the break of those highs. See how close it came just this one time, but it didn't fully make it to break the highs. But it's got a lot of buy orders sitting like right above these wicks. Look at how accurate that is. Look at how efficient this is. This is by 46.39. Look at how candlestick came all the way there. Look at this. Look at how efficient this is. Man, you can't make this up, man. Look at this. You know, whenever you see that happen in the market, that's basically what that is. It's just an aha moment. That's all that is. You know, like when you start to realize that things are not as random as they may seem when you first start trading. Because I know some of you have been trading only for a few months now. But like over time, the more you're on the chart, you start to see these things happen over and over again. Then you start to realize why it's important to have a trading plan, why it's important to be consistent, to execute, not to hesitate, and just like believe in your edge, right? Because this should, in a sense, make you feel that with all the data you're collecting, that it's not for nothing. And you will start getting the results that you should be getting based off the data that you've gathered, right? So you just have to foretest, you have to keep refining, you have to keep educating yourself about macroeconomics and why the market moves the way it does. Don't just have a trading plan to have a trading plan, but understand the context of the market. And the best way you're going to understand the context of the market is just by understanding the fundamentals, the news, and not just a forex factory, but obviously everything else surrounding that too. It looks like we got Trump speaking. Oh, he spoke yesterday. Orange folder. Only thing we got is core retail sales and core PPI today. Yeah, but once you got your sample size data, all you got to focus now on is market context. Because, you know, like when you're collecting your data, you're not collecting it with context, right? You're just backtesting. You're backtesting technical analysis, because it may be a bit difficult to understand like what was moving the market, let's say 2 months ago. You're not going to remember that. And sure as hell, I could bet that there is less than 1% of people in the chat here right now who do backtesting and actually go through fundamentals backtesting and see like not what just was on the forex factory, but like what was the overall state of the economy during that time. You know, what was the overall sentiments of the economy during that time? And rightfully so, because it's very difficult to do that. It's very difficult to do that, you know. You do that more in real time. But it does play a role in terms of like how you're seeing your sample size data come out. Because I know a lot of people, especially last year and towards the end of last year, were having an amazing time in the gold market because of how gold was performing, correct? But they might have not known it was just due to the context or the environment that they were trading in, because 2025 was completely different from how 2024 moved. In 2024, I was happy with 14 pips. I was happy with 13 pips. If I was getting 20 pips, that would be a 1-to-2 risk to reward. If I was getting 10 pips, that would be like a 1-to-1 risk to reward. I was happy with having 5 pip stop losses. You know, my stops used to be really tight because the volume was less. In 2024, 2023, volume was less, so I could get away with like 5 pip stop losses. Man, nowadays you can't get away with like anything less than 16 pip stop loss. It needs to be 16 plus pips, no matter how good the structure is. So I think it's that context part of it is like super important, because the way I would have backtested 2023 and 2024, for example, would not have worked in 2025, 2026 without extending the stops. Yeah, the Fed rate cut happened 2 months ago. Yeah, we did have a Fed rate cut, but we should be having 2 more this year. Coming down towards the support on the 5-minute. It'll break that support to come down to retest its lows. If we can break that support, then, you know, maybe price ranges for a little bit longer here. It's like about a 76 pip range. Candle just closes that at top wick. Hey, but that distribution played out beautifully here, though. They pushed around 40 pips, reversed. Really nice push. You thought he was going to break the all-time highs? It may still break it. It might break it later on. It doesn't. You see, the thing about the market, it doesn't have to break it now. Although it would have been nice because it's a high volume time. This is a London session. But it could break it. The next high volume point is going to be pre-New York. Pre-NY in about 1.5 hours. That's the next high probability time. Especially if price comes up here like this. Towards that's 6 a.m. Eastern time. That price can start moving to take out the highs. That's why I don't think I'm done for the day. I would like to try and catch one more move. Because I do like the way price is flowing. $4,700 coming this week. If we break this accumulation, we should at least see 4650. 4650 is going to be around 100 pips. Some people like to do this, right? Some people who trade accumulation breaks, they like to measure their ranges. They say the size of the accumulation would be the same as how much it can push. Now, I don't find that to be true, because I've seen the smallest accumulations have the biggest moves. But some people, they like to look at it like this. So you can have price move like, you know, towards 46, 56, but I personally think maybe it's going to look at 46.50, a 100 pip move, and then try and set up again. Silver's crazy. I tried to trade that. But silver should be moving good, right? Because... oh, damn. What happens pulling back there? Silver is a 1% up on the daily. Which... oh, wait. My bad. Where'd it go? No, silver is up 3.7% on the daily. And it looks like it's getting ready for a move as well, silver. On the 15-minute, you can kind of see it a little bit better. So, okay, let's see what happened over here. Somebody asked in the chat yesterday about silver and when to take a silver buy. So I said, wait for silver to retrace, create accumulation, and then breakout. But let me see what happened. This was during the London session. Yeah, I think this was the accumulation then right here. Yeah, that was accumulation. But that's the 15-minute. Price came down, accumulated, and then wait for the break. That would have been the entry there. And you see when the break came in? Look at the confluence of when the break came in. When did this come in? Same time as the New York session. Come on, this is not random. How does it set this up and then break during the New York session? So that's a really high confluence. And you also got the SMA crossover here for price to continue moving up bullish. So that's what we mentioned. Someone's looking for buy on silver. We mentioned just wait silver come down, accumulate, and then go up. It's the same thing that's happening here. If you look at silver on the 15, the 5-minute, price has come down, it's retraced. It's doing its accumulation. Now imagine if this breaks. Just imagine if this breaks during the New York session. What kind of a confluence that would be? You know, what kind of volume that you would be expecting to come in on silver to continue moving up bullish. That same idea is going to happen on gold. Like, pay attention to where gold is sitting at during these session opens. You know, that's why we like the London session. That's why I also like London session, because you see the volume that's coming in over here. It looks like a... it could be like a fake out. This is an accumulation, manipulation, distribution to the highs on the 5-minute time frame. But you see when the volume is coming in, so you got to use that as a confluence for your directional bias. And the session opens are the most obvious ones. And then you have the pre-New York ones and the pre-London ones, which are happening here during Asia, technically speaking, during Asia time. So you can't see that unless you know what time it is that you're supposed to be trading them. Right? So that would be from 1 a.m. Eastern to 2 a.m. Eastern. And then 2 to 3 is still pre-New York, but I mean pre-London, but it's a little bit late because most of the moves would be coming in from like that 1 to 2 a.m. And then that hour before the London Open can sometimes be a bit sketchy. But when price is moving, especially on gold, you will see it move and it will let you know it's moving early. And you'll see these moves happen during like early Asia time, early pre-London time. And if you're getting too close to London, you might as well just wait for the London Open, because what typically happens are these session open fake outs. You see like fake out happen right here during the London, right at the London time. Session open fake outs can happen. So you could have like a very nice consolidation break, but since you're trading this specific time, you're not accounting for session open fake outs. So you might find yourself taking more unnecessary losses. So you got like a little V-shaped reversal here. Break of the highs. Beautiful. Liquidity grab confluence. Clean range on the left-hand side. You come here onto the 15-30 minute. You see you got clean traffic for price to move up towards that resistance point. Entry confirmations. So it filled up the range. This filled up like about 65%. 55% of that range, you see, has been already mopped up right over here. That's it. It doesn't always have to fill the range, because it doesn't have to. So like 65% is usually like what we see as a good medium to say that the range has already been mopped up. I mean, you can look at what gold is doing right now if you don't believe me. Gold is mopping up this next range. It's coming down towards support here by 46.25. Doing the same thing like clockwork. Same thing that happened right here. Same thing that happened here. Same thing that happened during my trade this morning. It's the same thing that happens with a lot of these trades. A lot of these trades. Look at yesterday's trade. Shotgun play. Fill up this range down towards the support where we had rejection wicks. Got a shotgun entry model. Candlestick close below support. Over here, next candlestick broke the previous candlestick lows to fill the range down towards those rejection wicks. And now the thing is, all you have to do is believe in that edge, see that edge, understand that edge, and just execute on that edge. You know, and if you see that happen over and over and over again, it's a good foundation to have, because that's not going to change. You know, that's the thing that I think, like with TFX concepts, at least bring that more to light. Like, you know, this is an edge that it's never going to change. So you're never going to go wrong. Trust me, because there's nothing that you're going to find that will be perfect. You know, sometimes people are looking for this perfect thing. It doesn't exist. But let me tell you something, like this right here, this is the closest thing to like a consistent foundational edge that you can build in your system, right? You have to have this piece. It's like a piece of the puzzle. This is not the end all and be all, but it's a piece of the puzzle that you know that sample sizing this data, there's truth to this data, and you're going to take that and then apply it onto your entries. And it helps give you an edge, right? Like, this is never going to change, chat. This is never going to change. Look at this. It's never going to change. This is your edge. This is a piece of your edge right here. You understand? You're never going to find anything that's 100%. I can guarantee you this. You will never find anything that will be 100% in the market. But you want to find something that has some kind of a consistent edge like this. And that's your foundation. Now you need to start building upon that foundation with time, entry models, experience, and be consistent with your approach to the market and how you take your positions. That's it. A lot of people can't do that. And that's why a lot of people are not profitable. Because they'll see this and they'll try it a few times. Maybe 1 month it doesn't work out perfectly for them, but then they'll give up on it quickly. But the problem is they haven't built the experience. Because when I started looking at this as well, I struggled a lot with it. It's a very simple concept, but the people teaching me this concept didn't fully understand it themselves. Correct? They didn't fully understand it themselves. So they actually made it more complicated than it needed to be. Because when they were teaching me this, they would teach me based off of like 4 hour, 1 hour, 30 minute, 15 minute, all these time frames. And I could never find a way to have all the time frames line up to look clean. It's very rare that you're ever going to have all time frames line up to look clean. Correct? So if you're going to take a sell, there could be an hourly support there, but the 1 minute or 5 minute has clean range. So you would be afraid of the 1 hour support and see a wick and ignore the fact that the LTF has a clean range to keep moving down. So you would never take those trades. Always looking for perfection. But in simplicity is where you actually find your consistency in the markets, because the market's set up in such a paradoxical way that there'll always be a reason for why you should not take a trade. So you just have to get through that and see, how can I refine my approach to the markets that will allow me to move with the market? Because the market needs to move. At the end of the day, you start breaking mental barriers of what you think price action is, because price action is meant to move. At the end of the day, you don't even know 100% if price knows if there's a support there. It could just move because it needs to move. It might not know even the support exists. It might not know your fair value gap exists or an accumulation breakout exists. Like, these are mental barriers that you also have to break with time. Not in the beginning, but with time. That's why they say, before you become a philosopher, you have to make money, right? I did not become a philosopher before I started making money. I started making money first, and then I became a philosopher. But when you start to trade, you need to have a certain system in place that will help you see these things down the line. And if you're trading some rocket science, then you know that's not going to be very possible, because there's too much going on. I posted a not so serious in Discord, analysis in Discord. Yeah, the Loch Ness Monster pattern. Holding on tight, guys. Hey, it does actually look like it though, low key. Let's see, what is our count on 1567. It's filled up the range beautifully here. Look at this. 65% of the range has been mopped up. ICT will develop a new concept from that and make it his own invention. Yes. Yeah, I think yeah, this is very nice PA. Look at just the way that it's moving. Like, you see how the ranges are so opened up here? What are we on? 0.94%. It's a really good day to trade. I mean, like, sure, there's a bit of volatility and all that stuff, but generally speaking, I do like this structure. If we see the Loch Ness strat on ICT in the future, I'll be fuming. I say I'm relatively new to your community. I'm truly grateful for finding it. I really like your calm nature and consistent explanations rather than just hyping up trades. Thank you, man. I appreciate it. And welcome to the best London session stream. This is the best London session stream. Almost took gold longs, decided to wait for NY and news. London looks like it's setting up for pre-NY or NY session. Yes, exactly. But you see, as it's setting up, it's giving moves as well. There's nice little shotgun play. So what's the difference, chat, between the trade that I took yesterday over here and then this trade that we just saw happen right now? You know, there's, structurally speaking, no difference. So how can we now become profitable based off understanding this? Structurally speaking, there's no difference. That's an entry right there. That's a shotgun. My broker didn't even have a bottom wick on this candle over there. You see that? It's just a thing with the market. It's obviously, it does the same thing. What is this right here as well? This is literally the same thing. If you're going to invert the scale. Oops. What do I do? Scale price. See, invert the scale. Look at this. Some people find it easier to see buys and sells. I mean, sells than buys, so you just invert the scale. Make sure you hit the right button. You see that? What's the difference? You know, I think you're just gonna confuse yourself a lot. When you start to learn a lot of things, you overcomplicate the process. But that's how it is in the beginning, right? Like, imagine the first time you ever drive a car, a manual car. You feel like a bit overcomplicating the process. So you have to really think about everything that you're doing so you don't stall the car. But like, after a while, it becomes like tying your shoelace. It's a lot easier to understand. But the thing is, you have to apply yourself and you have to stick with doing that one thing, just driving that same car and then fully understanding that car. Because if you fully understand that car, then it will be a lot easier for you to delve into other things, right? Because you've built yourself now a solid foundation. It will be different for you if you start learning how to drive a Formula 1 car and then coming to drive a normal car on the road. Correct? It will be a whole different experience. But you can go from a road to a Formula 1 car. It's a lot more foundationally stable for you. Because at least you have the proper mindset and the proper rules of how to approach driving. Because you can't drive a Formula 1 car on a main road. Because it's a different set of rules. So, you know, that's what trading is. A lot of people like to start with a Formula 1 car, unfortunately, and that's what you get. In the end, you're going to have to come on the main road, but you're coming on it with all these other complications. But that's the whole idea behind TFX concepts, is like, how can we make something so simple, or rather something that could be so complicated, like very simple? Because by all means, trading is not easy. It's the hardest way to make easy money, but you can do it in a more simplified approach. Because you just have to be consistent. You will never be perfect, but you just have to be consistent. Remember, this is like Everest, right? So this morning I was on Everest for 40 minutes, and then I came down, get some air, then I came back up for 35 minutes, and then I've gone back down. So we don't want to stay on the top of Everest, right? Otherwise, we're just gonna slowly decay. And that's it. That's all that you gotta survive. You can stay at the top, you can stay at the heights, but you're not gonna stay all the way at the highs. You know, limit your trades and exposure to the market to like 1 or 2 positions per day maximum for a lot of people. And that's gonna be 1 or 2 hours. Because you know what happens when you're high up on Everest for too long? You're gonna start getting dizzy. Has this ever happened to you before? Man, it happened to me a lot of the times. I'll be on the chart for like 3-4 hours, not getting my setup yet. Man, I used to get dizzy. I used to literally get dizzy. You know, because I'm not drinking anything, I'm not eating anything, I'm too focused on the charts. So I used to get dizzy already. And then, you know, at that point, you end up just taking a trade just to take a trade because you were up there the whole time. And I used to get dizzy. Like even leaving the house, when my girlfriend would be like, hey, you know, we gotta go and do this thing. Man, I used to leave the house feeling dizzy because of looking at the markets all day. And that increases not only just that, but you building subconsciously anxieties. You become nervous all the time. You know, it's not good. It's not good, man. You gotta seriously mitigate your exposure to the charts when it comes to actual execution, because the way your brain works when you're about to execute is a lot different from when you're just paper trading. That's why we can chill here for like, you know, 3-hour, 4-hour stream, because after we take our trades, we're just watching markets. And we're just paper trading. And we're seeing our concepts play out. And that's it. We're not feeling FOMO, because the more FOMO you feel by watching the charts, it means you're not in control. It means that the market is still controlling you if you cannot see a move happen without you. Yeah, price kind of accumulating here. It's coming closer and closer to the support. It's already filled a good amount of the support though. I mean, it's a good amount of the range has been filled up here. See, but at the same time, it's creating a new range. From resistance, we got by 46.29 up towards this next resistance here by 46.37. And it's going to be a range of 58 pips. Yeah, funny thing, this buy is pretty close to where... That's why I say you're never really also missing a move in the market, right? If you're feeling FOMO. This buy is right close to where I took this, my buy this morning as well. This is the general area here. And I think there might even be another buy that's setting up like right here to go up again. And if you feel like you missed out on sells, see like price came up to the top and then sold off. But we are overall in a range. So these are the lows of the range and those are the highs of the range. So the market structure is basically telling us that if you're at the bottom of the range, what's the probability here price keeps coming down, as opposed to if price just moved up? Possibly a higher probability price moves up. Do you think AI would change trading in the future? I feel like, all right, so like, okay, so for example, I have a carbon footprint online. So with AI could literally take everything that I've ever posted online and build a mental model of me. And I think in that way, AI can actually help a lot of people. Like, think about having a mental model of, damn, I don't even know who. Jordan Belfort, or like some random person that you want to learn a lot from, because they have so much content online, and you can have your own personalized Jordan Belfort teach you how to sell things to people. You know, and there's gonna be a very little difference between the AI version and the actual person, especially if they have a big online footprint. So I think that's how AI will change things for a lot of people in trading, in all, in everything, basically. So yeah, I think it's going to help people improve a lot. Because imagine right now, you can use AI to figure out very complicated things that you had no idea about. Like, imagine if you were applying for a job, a very technical job, AI can help you get that job by just doing it simple, right? Now you can achieve so much more if you had the capacity of having like a mentor of the likes of very, very well accomplished people teach you on how to make money, like right by your side at all times. Like, just imagine that. You know, like, there's a lot you can achieve, man, because I want to find ways to build businesses. Like, for me right now, I'm trying to find a way to allocate my capital to something that will give me passive income. And I'm rather bored of real estate. And I think real estate is a very safe way to approach it, but I also think it takes really long and it's just not for me. So I'm looking for a way to build capital passively. And I don't want to open a broker. I don't want to open stupid funded programs because there's a cap to these things. You know, but now imagine if AI could give me somebody who could advise like very deeply on how to structure a business. Because at the end of the day, making money is one thing, but learning to invest that money and make it grow is another thing. Because I have a skill, and this skill can make me money. That's not a problem, but there's also a cap to trading, and this is earned income. So I need mentorship, but I don't know where to get that mentorship from to learn how to grow my money exponentially. You know, I'm talking about exponentially. I'm not talking about real estate. That's going to take me 10 or 7 years and I need multiple properties. So I think like that's where AI is going to come in handy. EFT? No, that also takes long. ETFs takes like 20 years. Those are investments for like 20 years. I need something in the next 5 to 10 years with exponential growth. Because there's a limit to trading. There's a limit to how much I can trade in a day consistently, because I can't take more than 1, maybe 2, 3, 4 trades maximum. I can't take more than 3 or 4 trades in a day. You understand? And I can't increase my risk either, because that's going to play on my psychology. So it's not as easy as you think it is. A lot of you think that you're going to trade $1 million in funding and, you know, everything is going to be amazing. Man, if you're going to start to see $50,000 drawdowns, $100,000 drawdowns, trust me, your psychology is not going to handle it. Imagine all those people who worked at all these investment banking institutions and the amount of stress that they deal with on a daily basis, managing portfolios worth hundreds of millions of dollars. You're not going to be able to manage that stress. And these are qualified people. And it's not that simple. And you're never going to get those payouts either, because that's a lot of money. So there's going to be a cap to it. And that's the reality. But, you know, the whole idea behind trading is like people are not generally getting to that position, right? And that's why brokers are willing to give you like, you know, small payouts, 50K, 100K, or whatever. Because the idea is like a bank. A bank knows that not everybody is going to make a withdrawal all at one time, because that will collapse the bank. A broker knows there's a very small percentage of people who can actually get to that point of withdrawing a significant amount of money that can actually hurt their performance being a broker. And at that stage, they only have to deal with that small minority of people, and they might just not even just give them the payouts, because the vast majority of people are not achieving that goal. So there's a cap to these things. But it's an amazing experience being able to make money in the market, you know, like, but you always got to find a way to grow that money, in my opinion. Gold's cooking? Yes, gold is cooking right now. We got a small little accumulation here. We got a support. Waiting for price to break the highs by 46.31. And then I think price is going to fly. Price is going to go up to fill this range. Yeah, it's really important. You know, like making money is so much harder than I think a lot of people think that it is at some level. Like when you're trying to make more of it. Because you're going to have to fight the banks. You're going to have to fight institutions because they're going to be coming for your money as well. So you're going to have to talk to wealthy people and see how do wealthy people manage their money. You know, maybe have a company if you live in Australia. Have a company that's registered in Mauritius that has a trust in another country that's owned by, you know, you have to make it in a very difficult way because when you're going to make money, people are going to want to come for your money. Unfortunately, the same banks are going to want to come for your money too. So the level of education increases with the amount more money that you're going to end up making. You know, one very good thing about AI is that in the future for all companies, you go to a company, gives you all processes of company works. And from that, you find a way to optimize many of the processes. Yes. But notice that in the future, many people that give services will lose these jobs to AI automation. That's true. Elon Musk says that it should actually create more jobs. And it's going to create a society where people don't have to work jobs. Even like, no, what do you say? Not more jobs, but a society which people don't have to work as hard for money. Because the whole system is going to be automated. And that's how AI is going to help like vast majority of people. I think he was in Dubai a couple months back. He was speaking about this. How AI is going to help people have like a standard income. So the world is going to have a standardized sort of like income. Because, you know, right now people can literally earn like nothing. So with AI, it's going to make it possible that everybody's going to earn something. Oh wait, I think the breakout is actually coming out like right here. It's coming a little bit sooner. Breaks above these highs. See if it breaks on that candle. Hey, Queet. How do you say that name? Quiet. Hey, Quiet Storm. Thank you for what's up. Instead of increasing risk per trade, why not scale up the number of prop accounts? Yeah. Oh, look at this price breaking here. Yes, total value risk is still increasing, but it's spread rather than concentrated. Gold's cooking. Dynastic wealth. Yes. Yeah, exactly. Trading is fun, but a lot of traders still have to work. You know, we still all have to work for our money. Silver is looking stronger than gold. Yeah, simplified approach. So this is a pretty nice break as well. How much did it break there? Like about 7 pips. Supply and demand zone, as we spoke yesterday, strong resistance, strong support, with a little bit of know-how of confluence. Lot size also matters. Do we also do NY session? No, I do pre-NY. I think it came back to retest the entries again. I'm going to come back and retest the buyers here. See if it can shoot up above these highs. So, you know, this is what I like to do. I just like to watch these plays when I'm not taking those trades. Just see how they're going to play out. because I want to see price move. It's battling with those SMAs too. It's not the best situation. It's kind of caught in some wires here. Got that 50 and 8 SMA. Got a 30-minute SMA. It's approaching. 1 hour SMA is still supporting it. It's nice. Hourly candlestick has not yet had a move, so it's still a fresh hourly candle there. And price is it's kind of struggling a little bit to continue to move up bullish, but this is the new higher high which is formed right here. So last time we created a higher high, price pulled down, create a higher high, price started to pull down here, but we're still respecting this zone. It's by 46.30. Unless we actually like fully start trading below this area, there's still a lot of bullish momentum in the market. It's 46.30. I think that was not the break. At least it's bearish on order flow, so I think it's not the moment. It was a nice start though. I would have taken that trade, but like if it was at my time, if this was happening obviously at 6 a.m. I'll take a note. Boom. But obviously, I think with the SMAs, yeah, it's fighting quite a lot with those SMAs there. Vic, does the city you live in have venture capitalist meetups? Yes. Yeah, it has a lot of events like that. I think like places like Dubai are really nice for those types of people usually go to Dubai to go for those types of events, because most people live in Dubai kind of like people also starting like own businesses and, you know, self-employed, and I think it's a great place to liaise and just work with people. Also tax, for tax purposes. I don't know why it's kind of chopping up here. We're getting a lot of wickage. It's a similar situation that was happening here, but we're getting quite a lot of wicks this time. So that doesn't look really nice. I would rather have candlestick bodies barcoding like this than get a lot of wicks like that. Because the wicks kind of feel like a thinning out of volume. Because we had this big push up and then this big push down. So this looks like a thinning out. Whereas this is still like a proper accumulation. Using this order flow concept with your stuff with your concepts is golden. At least in my head, it's extra confidence, makes it easy to hold. What is it? Like an indicator? It's setting up again. Usually be like the first failed attempt. And then it's setting up again for the rebreak. Of the highs by 46.32. It's kind of what happened here. First attempt was like a fail, and then second attempt was the move. Just like resetting up again, but it needs to re-break the highs by 46.32. Yeah, but I would have taken that though, but it might have played out differently at a different time, you know. This is 5 a.m. because the question is, when you come into the charts, there's always a specific time and moves that you're meant to catch. So you're not supposed to be just coming in whenever you want to come in. You're supposed to be coming in consistently at that same time. So you don't find yourself in a situation like this when you could have had like a profitable trade previously. Let's see if it can re-break those highs. Keep running. Starting the like retracement patterns. Oh, what do I think about FCON and who I'm supporting? I don't watch it. You know, the thing in school, I've always been wanting to do the thing that most people don't do. So when it came to football, I feel like a lot of people were in football, right? So I've always been more interested in doing things that a lot of my friends did not do. So in school, instead of football, I would swim, right? Also, I play basketball because people don't really like basketball that much, but everybody played football. So I did swimming, and then I did little basketball and skateboarding. So I don't know much about football. And you know, it's the same thing like even right now. When I look at my friend group, a lot of them like working like normal jobs, and they're not entrepreneurial minded too much. So I'm also different in that sense. I've always wanted to stand away from the crowd. So I always do my own thing. Like that's why you come onto the stream, and this is why you come onto the stream, because I'm not trading fair value gaps. If you want to learn about fair value gaps, there's literally like 100 other streams you can go watch about fair value gaps. You know, like even when I was building my systems, I didn't want to trade exactly like my mentors. I always wanted to forge a system for myself specifically. So I just took everything small that I could from everybody I was learning from, and then building myself a system. And I think that's just what you gotta be, right? Because that's the entrepreneurial spirit. Look at this. Now it's attempting to break above the highs again. 46.32. See if this is the genuine one. What's your order flow indicator saying? It's a cleaner move too, right? It looks a lot cleaner than this one was. It's saying bullish now. Yeah, it's bullish. It looks a lot cleaner as well. But it did literally what it did on the first attempt, like here. It broke the highs and then pulled down, took out the lows, and then pushed up. So it did the same thing. Take out the highs, push out the lows, push up. Push a little bit more this time. Let's see if it can follow through. Oh, and it got the 5-minute closure as well. Closed above resistance, broke the previous highs. But it struggled. It did basically what happened here in a sense. It whiplashed a lot before this move played out. Long from here. Div. Oh, where is this divergence? Come on, Goldie. Fill up the range. Took it. It should fill up the range. You know, the tricky thing about the market sometimes is, yeah, we know where it's going, but how can we get a good seat? You know, like how can we anticipate the break that's going to be the clean break? Because we know it has to fill this range. It has to at least fill some of this range up here. Let's get up to 46.35 at least. Because there's a lot more room for it. And the hourly now is having its move, because if you look at the hourly, this is the first move. Like, look at this. This is the first move of the hourly. And it's coming outside of that zone that we spoke about here on the LTF. That's the dispute. Because you're not going to trade this. Where would you have taken a positive trade here from 5 a.m.? Where? So you actually waiting to see when that extension is going to be coming in like this and distributing to correct the range towards like maybe like 46.38. You would not have taken a trade here realistically, right? Unless maybe you're getting some kind of a retracement, but at the end of the day, this whole area is accumulation. It's just a sideways movement. And this is the inception of the first distribution of the hourly candlestick. So that's the thing that's really going to pay people out. Just the same way that you had price move up here and price move down below here. So now it's moving back up again. So these are the moves which really pay people. Same way as you got this move down here. So like each hourly candlestick will have maybe a couple of these moves. So this is the first one for this hourly candle. It's 5 a.m. And it still has a lot of leg room to keep moving up there. Check the 30-minute. I think it will clear the highs. There you go, about like 25 more pips. 26. It's creating new like higher lows as well. Slowly trickling up here. See, like here, 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 and here. We're not really breaking anything significant to say price should reverse. Even if you look at the hourly, you see that this was this hourly zone that we spoke about. The price still kind of needed to respect this area here. You see, unless it like really started dipping below this zone, then we're still predominant like bullish. It's just stuck within kind of accumulation here, because this accumulation is also quite dangerous, because if it starts coming below this zone, there's a pretty strong possibility that the pullback will be deep. If this candle was to do this, pretty strong pullback, because that's what we get, the accumulation reversal signal. You see, it's still respecting it. So we might see something like this, break of the ATH, and then continue to follow through. That's why I said like the next volume time of the highest probability when this is going to happen is going to be from 6 a.m. Eastern in about 40 minutes. But until then, we're just within, we're just kind of range bound. We got resistance by the highs right over here. We got support right down here. So you see, it's basically we call this kind of like a John Wick. We got John Wick. John Wick buys at the lows, boom, 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 sells at the highs. Enter the buy at 46.40. It's 46.40. We're not even at 46.40. How'd you enter a buy at 46.40 if we haven't even gotten to 46.40? Houseway. You see that interview with Kanye West? Houseway. How would you take a buy there? Oh, what's going on here? Oh, oh, sorry, my bad. I didn't read it. Enter the buy TP. Oh, buy TP. Yes, sir. 46, 46, 40. I think your buy TP should be first at yeah, you see it's filled 65% of the range now. Wait, oops, wrong one. Filled 65% of the range, so we typically see reactions off of this mark, and then a next reaction would be by 46.37, and if it keeps going through it, then perfect. That's like bonus profits. But if you got like a buy and you were holding the full TP till there, that would be risky, because now you're gonna have a chance of a winning trade becoming a losing trade or a break-even trade. See, so it seems like on this break here, first accumulation was just the same as what this one was, a fake out, boom, took out orders. And the second one, which is a lot cleaner, was the one that distributed. And like it peaked at about 33 points. Very smooth entry as well. Look at that. Didn't give much of a hard time at all. And just kept pushing. Had really nice SMA confluences there too. Got that 8, that 50. That clean range up towards that 65 at least. That's the first mark, you see? There's a first mark over here. You're gonna start to see some reactions off of as it continues to try and fill up some of this range. Vantage was a little high. Wanted to take partials, but I didn't. Still made this and more. This is alright, so if you still struggle like with TP sometimes, I would say a good medium, and you're gonna see this a lot with gold, correct? A good medium is always look for TP around, if you're using a 16 pips stop loss, you know, 1-to-1 is gonna be a 16 pips. If you use a 20 pip stop loss, 1-to-1 is gonna be 20 pips. Right? But anywhere from, let's say, 16 to 30 pips is where you're gonna start to see reactions on gold. It's quite consistent. It's quite consistent. If you want to be safe, just generally speaking, you see him like about 30 pips, then you're gonna have a reaction. Welcome, Bruce. The unfortunate thing is market loves to do this sometimes. Plays a lot with emotions. Because this was a high value zone, high volume area that price we're going to distribute from here. So it just came back to retest it. It's like the same thing that happened here. I already spoke about this one, this breakout. See how price came back? Retested, boom, boom, moved up, same thing, boom, boom. So that's the consistency, because the rest of this is you have to differentiate between let's say like a distribution here, and then where markets set up, like here and here. There's a smaller one here that failed, but you have to know where it is that you're getting in, right? Are you getting at a point where the market has given or wants to give you an area to get a distribution, or are you trying to catch a move now? Because someone's trying to catch a move now, not knowing that price is in a distribution, and then you wonder why. Okay, wait, actually no, this is actually, there might be a small move here. It's not the cleanest at the break of that high, but I see a little bit of a fake out situation, a little risky, but you have to see like where has a price come from. See how much of that push? Pretty nice push. But you have to see where's the price coming from. It like gives you a much better idea of like what to expect from your moves. If you're either catching it like at a point A or you're catching the continuation. It's a continuation, entry confirmation. And this is all important to know because when you're going to start taking like big risks or when you start looking for trades with like better confirmation, you have to be able to differentiate. You know, especially like if you're trying to maximize an account and you're going to start risking like 5% per trade. If you risk 5% per trade, you want to give yourself the best options, right? You want to try to get as close to the beginning phases as possible. Because sometimes what happens during the pre-London time, I'll get like a move, happen pre-London, one move, second move. By the time the third move is coming, I know this day I've already missed like on certain moves. So eventually one of them has to fail. You know, as soon as you come into the third, fourth one of them was going to have to eventually fail. But it's much safer if you get the first or the second one. But you see it's filling up the range. Now we've completely filled up the range up towards resistance here by 46.38. See, morning trade. This is a bit different. My indicator not detection all yet. This is good to avoid fake outs. Then you can take from down there, but you need to understand the idea and market bias. Get a nice little accumulation. Fake out. Accumulation, manipulation, distribution. Price making LL and CVD, HL. This is seller exhaustion. Yeah, that's a very nice trade. Let's bring that right there. Let's bring that to the side. Nah. Really shy. Gold doesn't want to break those highs. I'll still hold. Look at that, chat. Profit taking. Range has been filled. Now we're getting profit taking. So you see this? Trading is like a lobby, right? It's like a lobby and you're playing a video game. And the video game is you're basically trying to understand the psychology of what's currently going on. So if you got to look at it from that lens, you see you start to understand certain movements like this a little bit better. And you just take a simplified approach to it. It's not always easy to take a trade. As you can have already seen, there was one fake out that happened here. You had to give it a second chance to get in. Just the same way as my first trade. The first trade was a fake out. I needed to give it a second chance to play out. It's not always the case that you have to give a trade a second chance. It just seems to be the market condition right now, especially at the bottom of the lows. So you're looking at this like in the lens of a video game. You know, like certain video games, certain maps are going to have certain characteristics. Certain players are going to have certain characteristics. But one thing that's always been true is that ranges get filled and you see the profit taking from the players. And then that whole thing is going to start again. It's going to set up again. Remember when price came down? You might think you miss on the sells. Remember this first sells? But you see the buy set up again. Right over here. The buy setup for price to move. Just the way it came down like this. Maybe you thought you missed out on this sells. It's like the same thing. Look at this. The same sell that happened here is the same sell that happened here. The same buy that happened here is basically the same buy that happened here too. So, man, I think like when you gotta look at it like that, it's so much more enjoyable. Like trading becomes a lot more stress-free, a lot more enjoyable. And you don't overcomplicate it. You focus more on the consistent approach now. You know, but that's kind of like your anchor point to understand each market's condition. And then you just have to find a way to execute consistently. Without over trading, without revenge trading, and letting emotions get in the way. If you're to enter a 12-hour swing, where would you? 12-hour swing, I would enter during the daily open, like during the Asia session. We once had a stream which was like 9 hours long. And we got into that trade. This was pre-elections, before Trump became president, and we thought gold was gonna skyrocket, so we got in during the Asia session. And usually when it comes to those type of longer trades, you want to see what's currently happening in the economy that's going to allow your trade to play out in a certain direction for the rest of the day. So if you look at gold, for example, and how gold started off on the Monday, we had the beef that was going on between Trump and Powell that actually helped gold move up. Correct? So those kind of macro driven days are the best for 12-hour plus trades, I would say. But a day like this, I don't know, like so far it's really good, but you have to see what happened and why price is moving the way it's moving. I gotta be a little bit more locked into these events. But I think I've noticed that's been happening quite a bit, and or it happens over the years, as during the weekends we tend to have some kind of a news come out, and then during the market open you tend to see an instrument play out in a certain direction. So I think during the weekend time is like also very much more obvious. It sounded like you saw what happened with the Venezuelan president. He got caught during the weekend time. So what does that mean for gold market open? Correct? Like certain things like that, they'll be more obvious because you have more time to think. But on like a day-to-day basis like this, it just has to kind of like fall on your lap. Just has to be like super obvious. For me, this whole silver tight physical supply fueling a sharp price movement, they make sense to why silver is also moving up, but that fell off my radar, because what's on my radar right now is always the most obvious things, like with Trump trying to take over Greenland, for example, or with Powell the other day having a comment about how he will not allow political pressure into the Federal Reserves. Like those are like much more obvious things, and you're gonna find a lot more news broadcasts about those type of events, correct? And those are the ones that I think really gonna help you in terms of holding trades longer. So you don't have to overthink. You know, people like to overthink. They like to go down this rabbit hole that doesn't exist, man. Like you're gonna start looking at TCP reports and all of these things that happened 12 years ago and trying to find correlations, and you know, that's just all just kind of gonna confuse you, you know. Taking profit from here, 715. Oh, nice. Amazing. Yes, sir. Profit is profit. Let's go. Very good. That was your second entry. Still holding that 1 hour could break. Yeah, it's gearing up. Chat, I'm taking my next trade in like about 30 minutes. I'm gonna trade a pre-NY, because I think that's, if we're gonna break these highs, we're most likely doing on this next hourly candle. So this hourly candle has already had a move, right? It's come from that accumulation we just spoke about down here. So, you know, this accumulation, you know, some bulls are just not meant to be ridden. So today we had a couple of bulls, like El Chapo. We had the El Chapo bull today. You see, El Chapo came in and he had to shake off these initial buyers with his swings, but only a true cowboy can handle El Chapo. So you see, we had to come back onto El Chapo and say, no, you must at least pay me something over here. Then, you know, he paid us something. Then he came back again here. See, I like broke about these highs, came kind of like threw them off a bit, and then continued to go up. That's literally what a bull does. I think when I look at the market, maybe I'm looking at it too cartoon-like. So some people are not going to resonate with me, and that's 100% okay. Because it takes a bit of experience to also like understand and visualize markets in a different way. Because, you know, when you look at these charts, all we see are just like this 2D surface, right? All you see is just candlesticks moving up and down. But over time, you start to understand the kind of like funniness of the way the market operates. The longer you spend time with the market and you build a relationship with the market, it has a sense of humor. And some people take that humor as a kind of a victim. You know, you play the victim and say, oh, you know, this happened to me today. This is not good. But it's kind of like a humor. And the market will pay you. It's a relationship. But it will not make it easy for you. But if you remain consistent and disciplined, it will pay you in the long run. But a lot of people cannot survive that long run process because they can't find the humor in it. I found the humor in it very early on when I was losing a lot of my trades in my first year of trading. I used to wake up every day with a smile on my face, happy and willing to go and take my next loss. Because at some point, as I always say, I was losing so much, I needed to find the humor in it. If you don't find the humor in it, then you are just going to have a hard time and you're not going to enjoy it. And you're always going to play the victim. So whenever you get put in a very difficult situation, sometimes you have to let loose to protect yourself from losing your mind almost, because trading is not an easy endeavor. And the more you fight it, the more dangerous that's going to be for your mental well-being. So you have to allow this process to take like a more natural progression without trying to force anything, but also putting in the work daily at the same time. You have to put in the work, but don't let the work break you. Does market will revisit the 4600 zone to make money? It will come up to 4600 zone. Oh, but that's a pretty big drop. We want to see price go up here, like targets by 4700. I'm waiting for NY2, hoping for a juicy push at the break of the ATH. Yeah, it's coming in now. You see, like this whole zone is just an accumulation. So we have not yet attempted to break the all-time highs by 4639. It might come in sooner though. It may come up and then set something up somewhere around here and then break. So you might find yourself like in an earlier entry as it breaks the highs. That's essentially what it was trying to do when it came all the way up over here. But you see, it was not able to do it. So it came in and rejected right off that high by 4639. Chat, what do you think we could find on the dark web about trading? Has anyone ever tried writing anything about trading on the dark web? Maybe we can get a Bloomberg terminal for a cheaper price than $20,000. What's a good browser? I think the first thing you gotta do is download a Tor browser. Yeah, but my hard drive's not even encrypted. It's always risky, but you could probably find a lot. Maybe you could find like a super secret strategy on the dark web. But I don't have a lot of you as well don't have an encrypted what do you call it? An encrypted drive. I've never done it, but if you type in BitLocker on your computer right now, check if your drive is encrypted. if your drive is not encrypted and somebody was to put like let's say like a physical device in your computer that can hack information like a flash disk, maybe even a software, they're going to access all your passwords, all your files, and all that is because you have not turned this thing on. And the statistic is that 70 to 80% of people who own PCs do not have this thing turned on, because you have to have a, I think like a code that you have to save somewhere. And if you lose the code, you might lose access to your computer. All right, gold is slowly creeping up now. Uh, 4K account reaching 90K in a day, possible, I guess. Let's see. Wow, Discord analysis. Alias trade was amazing. I feel skeptical about it though. Let's see. Oh. Oh wow, look at that. 4,000. I mean, full porting it, 50 lot. Holy. That's a full port right there. Look at that gold. Is this gold? Gold spot, yeah. Gold entry. 46.27. Nice little accumulation break there at the highs though. My entry would have been literally like right here. Take a buy right here. Zero drawdown as well. Pretty nice. Came back to retest. Boom. Retest that entry and then continue to move up bullish. It's a sniper entry here. Oh wait, that was my entry. That was my entry. Yeah, I did take a buy here. First buy was here. Second buy was here. That's the thing I like about gold. It's just like, it's moving up so much. It gives people so much confidence. Like whenever you execute on a buy, and everybody wants to get into a buy in gold. Like literally everybody just wants to get into a buy in gold. Does Apple have that too? I think so. They should. Because it's just, it should be like some kind of security measure. So yeah, they'll probably do. No. I've been on the dark web before. It's just finding the right browsers can sometimes be hard. Not the Tor browser, but like the equivalent to Google. Finding the right Googles. It's kind of creepy as well, low key. Chat, have you tried being on the dark web before? Write a 1 in the chat if you've ever been on the dark web. It is weird being on the dark web. It's like a place where, how do you even describe it? It just feels illegal being on the dark web. Eisen, oh nice, yeah. It feels illegal. Just the fact that you can literally get anything there. So creepy. You can hire hitmen. You can get guns. You can get organs. So like organs like lungs selling for $50,000, but at the same time you can get scammed. Yeah, a lot of scams in there. Nope. Yep. But it's like something I mean maybe you're gonna be trying like once. How to join? Yeah, you can get poison in there. You ever heard like this poison called the devil's breath? Apparently you're gonna blow that on somebody and you can make them do what you gotta do. Like if you want them to remove money out of their ATMs, it's quite a popular thing that happens to a lot of people. So they're like in a daze, and if you tell them, hey, let's go to this ATM and withdraw all your money, then they do that. It's it's crazy. It's crazy. I'm scared to go on there. I'm trying to encrypt my drive first. There are layers to the dark web. I've been on the first layer. Yeah, I've been on the first layer too. I'm about to long now. It's too early to long. Wait for the new Owly candlestick to open. This one's already had its move. You see, it's kind of compressed here. So you're going to have a better chance in 11 minutes. You're going to get the new Owly open. Then that's going to have a better chance of continuing to move up bullish. Let it set up and then continue like this. I smell the devil's breath on the subway. I had so much fun on there. I don't know what kind of fun you're having. Let's see. Her entry is right at the bottom. You can see the blue arrow. Yeah, I know. I saw it. Sniper entry. I can rarely ever get a sniper entry. I don't think my entries are really sniper entries. They're always gonna look at the break of some kind of a wick. It's always gonna seem like this. Break of the wick like this, or maybe break of a wick down here. Or like this. Never really get a sniper entry. Maybe if we go on the 4 hour, it's gonna look like a sniper entry. We're like, yeah man, I caught this 4 hour right here. Oh my god, I can't believe you got such a good entry. You gotta tell people who trade the 4 hour and the daily time frame. You gotta show them your entries. They're like, oh man, how'd you get such a good entry, bro? I've been sitting in drawdown here since the market opened. Bro's getting sniper entries. Because like, for example, if you got a really big stop, obviously you're gonna be sitting in this massive drawdown. And it's even more important for you to have the direction correct. Right? So where are we heading for the rest of the day? What's the probability that price continues to go up as opposed to if price comes down? Now you're just stuck in choppiness. And this is the worst kind of exposure to have on the market, in my opinion. It's a lot better to be in and out, such as this. Because anything can change. And you got news. We have news coming out at 8:30 a.m. which is core PPI and core retail sales. So that's also going to affect price. But it looks like it's coming out neutral, 0.4, 0.4. With core PPI, we don't have a previous. Forecasting previous should actually be 0.1. I don't know why it's not registering here on Forex Factory, but previous is 0.1. Expecting 0.2, so we're actually expecting good numbers for the dollar. So gold should actually come down for core PPI. If we do end up getting anything above 0.1, it should still be good, but if it's a 0.2, then it's still kind of neutral, and at that point it's a lot more confusing. But core retail sales, you see like the numbers for core CPI came out negative. We came out less than focused, right? Okay, so nice. It came out, actually this turned red, so price on gold moved up, even though it's basically neutral. Basically nothing changed. So it might be actually the same as a core PPI. If we get 0.2, then that should be red, and then good for gold to continue moving up bullish then in that case. And core retail sales greater than forecast. Yeah, we're expecting neutral as well on this. But you see the neutral here seems to be wait, 0.3, 0.3. Yeah, just avoid this. Yeah, in my opinion, just avoid these red folders. But For core PPI, we may see that price comes out negative. Same as forecast, but negative. Like the core CPI was. And that would be a pretty good catalyst for us to break above the highs, correct? We might just be waiting for that too. I hope we do have an attempt on that from 6 a.m. though. We have about 7 minutes for the hourly. On the higher time frame, it doesn't really look very nice. It looks quite compressed, quite choppy. You have a lot of wicks building here at the highs. So it's not looking too appetizing. We need to get through this level right over here. You can see price is really fighting between selling off and moving to an all-time high at this point. So the 1 hour looks really bad, but if you go on the 5 minute, it looks really nice in terms of the swings and the types of opportunities you can catch. My previous girlfriend once went to her room, took the laptop and withdrew money to give these guys that use devils. Wait, what? That's wild. Long now, thank me later. Got out from it. Win is a win. Just finding stuff out more like a knowledge tour. Don't call along. You're calling along as price is moving down. When has that ever worked out for? Like, that will rarely seldom work out for you in your favor. When price is moving down, that you're taking a long position. Wait for structure to build, wait for support to be created, and then look for opportunity to take your longs. Because right now what you're doing is gambling. And people love to do that for reasons where, in my perspective, in my humble opinion, it's a matter of just being afraid to trade with structure. So you'd rather trade against structure because it somehow just feels safer to do something like that. And I understand why that's the case. I fully get it, but yeah, I stopped doing that. I used to do that a lot with Fibonacci's. But yeah, I think it's much better to always wait for like some kind of a structure to support the idea of the direction you think it's gonna go, rather than just to assume that it's just gonna reject right here. But I fully understand the mentality behind that one. I've been there, I've done that. I think what happens is when it doesn't work out enough times, that's when you start to look at something else. And it took me a really long time to accept that that did not work. Even if the people I was learning from didn't do that, I used to like doing that because of the feeling it gave me of having a sniper entry. It feels so good. Comes into your entry, then goes into profit. Sometimes it feels really safe. But in the end, you got to see like, okay, so if a candlestick is closing above resistance and breaking previous highs, or closing below support, breaking previous lows, for example, it's always a good confluence for directional confirmation of momentum. As soon as it starts breaking wicks, you see like how we've not even broken 46.39, but we came like super close to it multiple times. Look at how close we came to it multiple times, but we never fully broke that zone because the market also moves with intention. So the moment it breaks that zone, it's confirming momentum. Without breaking or without confirmation, this long position is just a wishful thinking, you know. But the important thing is, it's not even that. It's can you sample size this specific situation on why you think a long here is gonna work out? Like, is there something very specific that you can look at consistently? It filled up the range too. So from that resistance towards that resistance. So this is what we call the money range. See, the money range here has been filled up towards 46.38. Now price is coming down. Why is it coming down? Because the range has been filled. Money has been taken. Imagine the buyers who got a buy here. If they were greedy to let this move come back into drawdown, what would that mean about their mental approach to markets? It would mean that they're greedy because they've already had a move come up, and the market punishes greedy people. So you see, buyers and sellers make money, but pigs get slaughtered. So this is coming back to retest the previous entries. There goes all the FVGs. Yeah, there goes the no VGs. I'm okay to lose 20%, but full porting will give me an 80% gain later. How can you convince people? You know, some people are also going to say, I don't mind losing more. I got a 1 to 5 risk to reward. But how often will the market give you a 1 to 5 risk to reward? Or a 1 to 10 risk to reward? Even if you have a really bad hit rate, how often will the market give you that risk to reward? Especially if you're taking multiple trades a day and you're not disciplined enough to, you know, manage your risk and really limit the options that you give yourself for running. Because like, I don't always hold a running trade. I gotta pick and choose when I'm gonna hold my running trades. But if you're always holding a running trade, then you're gonna have less chances of securing something the higher the reward that you're chasing. But anyway, you know, you can just try. You can try it. You can try it. That's okay. I'm gonna be like Johnny Depp. You know Johnny Depp in Pirates of the Caribbean? That scene where his let me see if I can actually pull it up here. Let's see if I can pull it up. Will I find it? Oh yeah, here it is. Oh damn. Why is the quality so bad? It's like 144p. Oh, here it is. This is me and this is this guy over here. Wait, where's that scene? Oh, I don't get copyright for this. You see, this is this guy literally right here. Pirates, y'all be warned. Did you watch Fight Club? Yes. Awesome movie. It took me so long to watch that movie. But when I watched it, I wonder why that I didn't watch it sooner. All right, now price coming back, retested the highs. We just got the New York session here open. And I think what I'm going to do is I'm going to go have an ice cream and then see what I can do about the market later. But I appreciate y'all tuning into the stream. Leave some ice creams in the chat. Leave some ice creams in the chat. And I will see you all tomorrow. Adios.
Pull up in the whip, Flip 'em.